As you said, Mandy, we have already seen some inflows coming in over the last 9 months. Almost more than $10 billion have come in into Indian bond markets. I mean, though this is a watershed movement, a big day for the Indian bond markets, but we don't see any outlier yield movement today or going ahead because the markets have already discounted this event as it was announced a long time back.
But what will the impact be over the medium to longer term as that allocation rises up to 10%?
Yeah, obviously it will have a positive impact across the Indian bond market ecospace, and I'll say entire market ecospace also. So we are looking at yields drifting lower, especially at the longer end of the curve over the course of the next 1 year, supported by the strong underlying macroeconomic fundamentals, as well as these flows that are likely to come in. So overall, it's going to be pretty positive for the Indian bond market space.
Puneet, hi, this is Christine. Tell us more about India's bond market. What is the allure there? Because a lot of foreign investors are now plowing a lot of money into the Indian bond market. What is driving bond flows specifically into India? What do they like about the fixed income market in India?
Hi, Christine. Thank you. So I think the key factors here are the very strong and stable underlying macroeconomic fundamentals. So if we look at inflation, for example, I think we have inflation, both headline inflation under RBI's target. So it's forecasted to be at 4.5 for FY25. If you look at the core inflation, it's at a historically low level. It's trending lower. If you look at the external accounts, then we had a current account surplus in the first quarter of this calendar year, and we are looking at a current account deficit of 1%. If we look at the stability overall of the INR, we look at the lower trend in the fiscal deficit. So overall, the macroeconomic situation or the fundamentals are looking pretty good, which is leading to these inflows into the Indian bond markets and a positive outlook for the Indian bonds. So overall, I will say a stable macroeconomic environment is helping Indian bonds.
Okay, so correct me if I'm wrong. Investors, or foreign investors, have started buying longer-dated government bonds in the hope of better returns. Once the RBI starts cutting rates, the RBI has so far kept rates unchanged at 6.5%. It seems that policymakers in India are kind of divided over the kind of rate growth debate and won't cut till the Fed actually starts cutting. Is that your outlook as well?
So we do believe that RBI will be on hold, at least for the next, let us say, 1 quarter. They will look for the progress of the monsoons in India because the RBI members in the Monetary Policy Committee have highlighted the risk regarding food inflation. Though we have already seen 2 of the 3 external members in the MPC actually voting for a rate cut in the last policy meeting earlier in this month. So I think monsoons are crucial from that perspective, as it will give us some view on the progress of the food inflation in India. But overall, if we look at the growth inflation dynamics, then they point towards some losing in monetary conditions probably by the end of the year. So though we expect RBI to be on hold for next 1 quarter, but there is a high probability that RBI might cut rates by the end of the year.